Okay, so we've seen this nice bounce in the DXY. Ignore this candle, it's incorrect candle. So the dollar bounced all the way up to this descending, which is what I was expecting. And now what happens now, it's perfectly set up for an NFP, non-farm payrolls. We have news every day here. Let's just take a very quick look. So Thursday we have, yeah, initial jobless claims, ADP, that'll move things. We also have some EU stuff coming up. But really it's all about Friday. Look at this CPI, yeah, PPI, CPI, whatever, inflation numbers from Europe, and then yeah, the big data from the US ISM, and then obviously NFP. So Friday will be a big one. I'm not sure what we'll get today. Maybe just some drifting sideways, no breakout in the DXY, no breakout in yields. The markets may drift lower because they've come down. Just a quick recap, market's going to come down maybe a bit more because that's naturally what they want to do. And yields will probably just drift a little higher, bias to the upside. But let's take a look at commodities. Since markets have come down and since the dollar has risen, makes sense the copper goes down a bit, but it still looks okay, right? Look at these candles here. This is like a bit of a hammer, continued hammer so far. So copper actually looks okay. Could retest its highs on any sort of move down in the dollar, but also depends on the market. So copper, surprisingly strong because it's been pretty weak for months actually. So not bad. Natural gas, that gave a really strange signal on this date here, the 2nd of January. Just it broke out and then came back down again. But look at yesterday's move was good. That was a close above pretty much bullish engulfing, right? Closed above yesterday's high, or actually just underneath, but it's just as good. So, and we've got continuation because of that. So for me, next level is really here, 2.75-ish. And then the next level is 3. But natural gas is just absolutely destroys technical traders. And look at this exaggeration on the downside and then reverses. So let's see. If you're in natural gas, you better be in it for the long run. I think you will get to 4, 5 and all this, but hopefully you're not in an instrument that decays with time, as I was. So I closed my position because it was just I'll go over that on a different video, but I was in a decaying ETF, which means it loses price with time. So even if you bought natural gas at a lower price, the global commodity, let's say, you could still be lower, which was the case with me. So I just closed it. It's just a losing trade. I'll go over that in a different video, like decaying ETFs. But natural gas, I still think long term, definitely closing this gap and going back up to 5.5. I mean, it's just, remember, zoom out where you are. It's ridiculous, but it's all about the instrument. There's so much, Wall Street fraudulent financial instruments out there. So yeah, we're still going up. Let's see 2.75 after that 3, and then we'll see what happens. It works on its own fundamentals, natural gas, its own supply and demand. I don't really see much news influencing it. I don't see the dollar yields, markets or anything. So it's just on its own. Don't need to relate to anything else. That's quite refreshing, to be honest. Oil definitely does relate to news. And I think we have some news here. Libyan oil fields canceling production or halting some sort of supply. So, price goes up. But this makes for a nice double bottom, right? News seems to coincide with technicals. And also this area here is extremely strong because of what happened here. So the mid to low 60s, very strong support. And here we found support just before we got to mid 60s. So double bottom. Now let's see what happens. We can extend this. This definitely will be relevant. Trust me. Once we go up, you can imagine 76 should be resistance because it should encounter the descending and also the last high it made up here. So I'd expect a little bit of resistance at 76. So let's add that. And then let's see what happens. If we can close above 76 and especially above this descending, maybe then we can meet the next resistance, which will then be our last high. Last time it went all the way up there. And then to be honest, this will probably be relevant. That's what I see. Close above that, test that, and then probably testing the greater descending. Yeah, exactly. That's what I think will happen. And then it's all about closing up beyond this. And then we can touch the last highs of mid 90s. So oil looks good so far. And I think fundamentally oil should be good, even if the markets drop because of inflation and just constant geopolitical pressures, especially in the Middle East. Okay, uranium, this is surprising. Look at this massive gap down. Why was that? Was that the earthquake, which happened a few days ago? You'll have to excuse my ignorance. I'm not sure why the gap down. Maybe it's the earthquake in Japan, you know. That's the one thing that can surprise uranium traders, and I think they all know it, you know, some sort of Fukushima event. Now that's not what happened, but when you hear earthquake Japan, you think straight away, oh no, what about some sort of nuclear power plant being in jeopardy? So anyway, it doesn't matter about the news, it's all about what happened and it dropped. We lost this, you know, I don't know if this is really support. It's like a general trend line. You can see it was holding here, but then we never retested. But here we go. It did work though, didn't it? On the first candle, it tried to bounce, but no, there's just too much weakness. Down we go. And then I have this second one. This one I trust more because it tested it on a more consecutive, like spaced out basis, but we didn't test it for a long time. So I like these sort of tram lines, ascending tram lines. And so far, we're within the second one. So let's see what happens. If we lose this, and I would love it, no offense, guys, but I'm not in it. So I would love it. After that, it's pretty hard to tell where I think, you know, I think it would be this one here. I think it would be this massive one. I'm just going to lift it up. Obviously, it's resistance here, 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 and then here, this back test here. I'm just going to raise it a little bit there. That's what I think will be absolute. But to be honest, it'll probably be before, so that people like me who want the absolute low down here don't get it. I'd probably be buying at 2501 URA or URNM, the miners. I would really want CCJ Cameco, right? That's the one I really want. I don't know if we're going to be able to get uranium all the way down there. It's probably going to bounce and leave me as usual. I'm probably being greedy. But yeah, uranium surprised by the drop, but very happy with it. So I'm just going to watch it. I'm not in a rush to buy it, you know. I'm not in a rush to buy it yet. I need to check the miners in a bit more detail, but I'm very happy with this. So let's see how this second tram line acts. Again, if we close below this one, I would look for a further drop, probably to 25. Okay, gold and silver. Gold had a drop. Okay, that makes sense with the dollar going up and yields going up, and even markets going down, but more the dollar. And obviously we have NFP on Friday, so that will make a massive difference, I think. So what happens? Yeah, I've drawn this ascending line. I think that should act as support. Now, if imagine we just worst case scenario, we just drop, drop, drop today and tomorrow, we should find support just above 2000. So I would say 2000 is a bit of support just psychologically, but technically I would say just above 2010 probably. That's what I see. If we were to close below 2000, that would be pretty damaging. I think we would go all the way back down to the 1975 area. Yeah, because psychologically, oh no, we're below 2000. That should be support now, right? It was resistance for years, um, almost decades, you can say. So let's hope that 2010 holds if we do venture down there on some NFP downward move. Otherwise, it's still an uptrend. It can go sideways. Resistance should still be 2070 to 2080. Sorry, I'm a bit sick. Yeah, that's it. 2070, 2080 on the upside. And then I would say the 2010 on the downside. Otherwise, 1970, I'll say, if we close below 2000. However, silver, as usual, is weaker. Look at this. It's already touched its ascending. I think it's time for me to make it perfect. Look, you could say, yeah, something like that. Whoops. But the point is it didn't close below it. So it's already touched it. So if you've got gold going down to test its 2000 or 2010 ascending support, you're going to have silver down here, you know, 22.5, this low straight away. And that's already slightly bearish, actually. So if you do have gold testing 2000, let's just go back to gold. It better bounce and close up because silver is not going to have the best chart. So I would say silver on the downside, we have 22.5. And if it keeps going lower, honestly, it's always quite hard to tell. I would say 22 at that point. You know, this last low down here between 22 and 22.2. So silver's not looking great, but on the upside, honestly, look at that. If gold, it's so annoying. If gold gets to 2080, 2090, the absolute highs on the upside, I'd expect silver to be all the way up here, but really, it's got a lot of ground to make, so a lot of resistance to take out. So let's see if we can close above 24.8. at least 5, right? Let's clear these areas here. So yeah. Now let's just go to GDX GDXJ. This has nice ascending support, so that's nice to trade off. They can still go a little low and still have this uptrend intact. And look at this. If it's even to go to 35, I'm looking at GDXJ here, you would still be at ascending support and this support. So I think 35 is still should be support, strong support. Now resistance on the way up. Hopefully it doesn't go to 35, by the way. Hopefully it bounces just above 35 because you don't really want to go to the last low. Resistance, yeah, first of all, the gap fill at 37, but really it's just going to be one resistance level, that's 40. Let's just close above 40. You can see now how important it was to close above 40. We didn't do it, and now we're suffering. That's GDXJ. Let's look at GDX. Same chart pattern, it can go all the way back down, test ascending, just above the last low here. Let's call it 29 would be ideal. It's a nice big round number. It's pretty much the ascending area, but it could go as low as 28 point, let's say 7, and still not be bearish. It would be weak though. And you'd want to close not that low. You can test it, but let's at least close above 29 if we do go lower. Resistance, gap fill at 30.5. Otherwise, all the way up here. I mean, let's close above 32. So preferably above these candles here, 30, 32.5. So we just need an NFP, which is good. And then we can resume this uptrend and be all the way up here, and one more day. It can take 2 good days and we're all the way up to new highs, if you will. SILJ, which had a nice sort of, look at this. Now you can see how this descending is so important. Look, I was off by 1 millimeter. It didn't close above it. And now we're back down into the ascending. We closed pretty much on it. Because I know how the other candles look on GDXJ and GDX, this I'm not going to say this close below it. I might be off by 1 millimeter, but you can see how it's very tight here. So if we go down, we go to 9. 9 is support. If we go up, then we need to, we really need to close above, let's say 10.6 to really make sure that we're outside of this major descending and also a better close than all these candles. So there you go. Those are the miners. Those are the commodities. And we will do another video on Friday because that's when we will definitely know which way we're going. So good luck out there. Yeah. And I'll make another video on my portfolio update at the weekend, of course.